Hi, welcome to Managing Cash Flow in Times of Uncertainty, a webinar brought to you by the Community Loan Fund of New Hampshire. Since 1995, the Community Loan Fund has childcare initiatives have been providing loans, training, and assistance to childcare centers and home-based providers to help preserve and create early learning centers and facilities throughout the state. My name's Kim Vada of Kim Vada Consulting. I'm a management consultant working out of Lancaster, New Hampshire. Since 2014, I have been working with early learning centers in New Hampshire throughout the state, but also in Vermont, helping them consider and rethink business management practices. We do this through direct one-on-one technical assistance, coming into a center and working with a director to sort of assess their greatest need in the area of business management, but also through webinars, workshops, and the creation of resources. Today's webinar, is about cash flow. We're going to help you identify your center's current cash position, forecast short-term cash flow based on current enrollment and staffing, and also think about how changes in enrollments and staffing will impact your bottom line. This is definitely a time where centers are going through a fluctuating enrollment and staffing because of the impacts of COVID-19. So hopefully you'll find this tool and this process useful. We're going to use a made-up center to explore how this type of forecasting can help you make better financial decisions. Why cash? Well, most small businesses in the United States only have up to 30 days of cash on hand. And early learning centers are predominantly small businesses. So most of you, or many of you, are likely in that position where you don't have significant cash on hand. And then something like COVID-19 comes along. So businesses who were struggling before are particularly vulnerable because they had low cash reserves, but also because they likely had unstable cash flow. What we've discovered in our work with centers throughout the state of New Hampshire in the past 6 months, actually in Vermont, is that those who are able to tap into COVID-19 funding sources have been better equipped to weather the pandemic. And they'll likely make it through the next several months of uncertainty because nothing is really clear at the moment. The pandemic is still a significant concern throughout the country. And while we've been able to keep things pretty well under control in the states of New Hampshire and Vermont, it's still a significant concern for us as well. So knowing your cash position and bolstering your cash position is really important. And hopefully today's resources and today's webinar will help you see that. So cash on hand is the money you have available at any point in time to pay the bills. I think about your checking account personally. That's your cash on hand. You see how much money you have in the bank at the end of the month. You pay your rent, you pay your electric bill. For businesses, cash on hand most often comes from your operations. Obviously, if you're operating with reduced enrollment, you're receiving less cash. You're likely earning less cash because your expenses didn't necessarily decrease. Your rent is the same. And you also might even be staffing at levels that are higher than you normally would because of the restrictions that you need to operate under to meet COVID-19 guidelines. So it's important to focus on cash during a time like this. Cash isn't profit. Profit's that thing that's left over at the end of the year or at the end of the month. You produce your profit and loss statement to your income statement, and you see how much money you made over that period of time. Typically, it shows income and expenses, but it doesn't necessarily parallel with cash. For example, you might input some receivables at the end of March that show that you've earned some income, but you actually haven't received the cash payment on those receivables. You may not receive those until April or May. So cash is different from profit. And I want you to think about today when you're thinking about when we're exploring this workbook that we're really focused on cash. And it's how much money is readily available to you to meet your financial obligations. So knowing your cash position will help you make decisions about your business, how long you can pay the bills while operating with reduced enrollment, whether your center can survive a temporary closure, or another one. Some of you may be reopening, some of you have stayed open, and some of you need to be thinking about what if you have to close again. And then whether you have sufficient cash on hand to reopen if you are closed. In a time of limited cash inflow, you should monitor your cash flow frequently. Today's activity workbook, we're going to focus on a weekly cash flow. Regular cash flow monitoring is something that any business should do. You want to make it part of your monthly financial reporting, produce a cash flow statement at the same time you produce your income statement or your profit and loss, whichever you call it, and your balance sheet. If you have a nonprofit, typically you're producing these things for your board every month. A cash flow monitoring report is also something you should be looking at. My hope is that everyone will leave this webinar, go sit at their desk and do a quick calculation of cash on hand. While it's important to monitor cash, it can also be helpful to make a quick assessment of your available cash. And I'm going to give you an example on how to do that. The first thing we're going to look at is what we call a quick calculation, which is number of days of cash on hand. To calculate this, you need to know the amount of cash you have on hand, basically what's in the bank. Do you have a checking account and a savings account that you can use for operations? You determine that, but basically what amount of cash you have on hand. And then you're going to look at your average daily expenses. And this is your annual operating expense divided by 365 days. For those of you who do have non-cash expenses in your annual budget or in your monthly income statement, things like depreciation, you're going to want to back those out of this calculation. So you might produce your year-end profit and loss, and you're going to look at all your expenses for the year, and you're going to look and see if any of those were non-cash expenses, and then just back those out. So the formula looks something like this. Days cash on hand equals cash on hand, which is divided by operating expenses less non-cash expenses divided by 365 days. And we'll walk through this formula so you'll see how it can be applied. One other note for nonprofits, you also want to think about whether or not you have any restricted funds in your cash on hand. Perhaps there's $75,000 in your checking account that you use for business, but you received a $25,000 grant to purchase new equipment or books or curriculum or supplies, whatever it might be. If that cash is restricted to a particular project, you probably want to back it out of this formula. All right, so now let's look at how this formula is applied. So here we have our formula before us again. Again, days cash on hand equals cash on hand less our operating expenses, in which non-cash expenses are backed out, divided by 365 days, because that's how many days there are in a year. So let's take the first part. So in this example, we have $50,000 in our bank account. That's how much cash we have available. Our operating expenses are $275,000 in a year. We know that we have non-cash expenses of $25,000, so we put that into the formula as well, and we're going to divide it by 365 days. So we've created our first, we've outlined the first part, the formula in its first stage. Second stage, those of you who remember your math, you do calculations in parentheses or brackets first. So now days cash on hand equals $50,000 divided by $250,000 divided by 365 days. So this is it in stage 2 because we've got the 25,000 which we've backed out from the 275,000. So now we have in our third stage of the formula, $50,000, because that's still our amount of cash on hand, but $250,000 divided by 365 equals $684.93. So now we're looking at $50,000 cash on hand divided by $684.93, which is basically our operating expense per day of operation. That's how much it costs us a day. And so our number of days cash on hand is 73. Take a moment to look that over. Basically, this is telling you how many days of cash on hand you have for normal operations, assuming there's no additional income coming in. So we're just looking at how much cash on hand can we cover our operating expenses, our normal cash operating expenses, and for how many days. Basically, if you shut down and you had no other income coming in, how much could you pay your bills? It's not taking into account that there might be changes in operations, such as cutting your staff hours or laying staff off, which are all things that you would obviously look at. It is, however, a quick and effective way to assess how well your current cash will get you and how far your current cash will get you if there's a disruption in your center's operations. So we're going to look at another way to assess available cash and answer an important financial operations questions. We're going to look at a center that needs to answer some questions about their cash position. All right, so this is ABC Childcare, and they're asking them some questions about how much cash flow. So Nellie runs ABC Childcare. The center has seen a drop of enrollment of 50% since COVID hit. She anticipates she'll be at 70% of pre-COVID come September. She's done some surveys. Parents have been calling and making some inquiries. So she feels like things will improve. She does want to see how long she can operate at 70% enrollment without running short of cash. Her staffing levels are near normal because she's thinking about how to operate in accordance with COVID-19 guidelines. There's the extra screening and check-in. There's a layering of staff schedules. There's cleaning, all these sort of things that consider that have required her to keep staffing levels somewhat near normal. She would like to have a cash reserve in place if there's a virus resurgence and she needs to close the center. She's thinking that 60 days of her normal operating costs would be a good cash reserve amount. So she needs to answer two questions. How much cash equals a 60-day reserve for ABC Childcare? And how long can ABC Childcare operate before she hits her 60-day reserve level? So let's see what she does to figure this out. So she does a little math, basically. She scribbles down on a piece of paper, or she uses her Excel workbook, whatever tools you find at the ready and work for you. But she basically looks at what her income is. And she knows that at 70% of normal or pre-COVID operations, she would have parent fees of about $12,000, a couple thousand in subsidized tuition, some food reimbursement, and miscellaneous income. So she's looking at just over $14,000 in income. Under 70% operations. So now she needs to go ahead and look at her costs. So her direct costs with full staff looks at wages and taxes and benefits and program expenses. These are all the expenses that are directly related to operating, providing the child care. And those are just over $11,000. And her indirect costs with full staff is administrative wages, insurance, postage, supplies, all those types of things, maintenance, utilities that are required just to keep the business open. And so her total indirect costs are $8,000, just over. So she's got total direct and indirect costs of just over $19,000. So now we think about what's her cash available from operations. If she looks at her income, which we know is just over $14,000, $14,355, you can see in the bottom of the screen there, less her total costs. So she's actually losing about $5,000 a month at 70% enrollment. Not good. So how much is a 60-day cash reserve for ABC Childcare? Well, this one's a pretty easy one to calculate because she wants to have 2 months of normal operating expense. She's looking at that $19,295, which is what she said it would cost for direct and indirect costs during normal operations. So we're going to multiply that times 2, and that gets us $38,591.46. So Nellie's being pretty conservative here. She's setting aside 60 days of normal operating expense. In a tight time for cash, she might back off that a little bit. She knows if she was shut down, that she would likely, reduce some staffing, reduce some other expenses. She obviously would have, may need to pay her mortgage and her rent. She would have to pay those, but some other expenses would go down. Utilities might be a little less, obviously supplies and the like. So she could nitpick at that number, but she's being conservative to start, and she's feeling nervous about a shutdown. So she's saying 60 days, that'll make me feel comfortable. So that's what she's looking at. But those are the things that you would ask yourself. If I needed to shut down and get through 2 to 3 months of shutdown, what cost would I have to pay? And then ask yourself, what might I need to reopen? So we'll look at that a little bit more. Okay, so her 60-day operating reserve is the $38,591.45. So how long can ABC Childcare operate at 70% enrollment before she hits her 60-day reserve level? Well, it's mid-August when she's doing these calculations. Looks over the next couple of weeks, and she knows that her starting cash at September 1st is going to be $60,000. She did tap into some COVID-19 funding sources, so she's got a little boost in her cash in the bank on hand. The cash reserve needed for 60 days, we know that she's decided that's $38,591.45. So the cash available to subsidize operations after setting aside the 60-day reserve is going to be calculated by subtracting the reserve from our cash on hand, which means she has $21,000, basically $400 available to subsidize her operations. So how long can she operate before she hits her reserve level? She's going to divide that $21,400 by her net loss, right? Her monthly net loss, which we projected to be about $5,000. So she has 4.33 months available where she can subsidize her operations. So that's not a long time, and she's losing money at a good clip. So we know that Nellie needs to be thinking about conserving cash now, bringing more cash in now, and reducing her cash going out. So, think about some of the things that she could do to do that. See if there are any other COVID-19 funding sources that she can tap into. She certainly should be staying informed about what's going on related to COVID-19. Adjust staffing to the extent possible. She's kept staff near normal operations because she wants to adhere to guidelines. Is there any wiggle room in there? Certainly have her think about that. Boost enrollment however possible. Obviously be very aggressive about that. And, advocate, ask for help. Let peers, partners, others know her situation, see what they're doing to maximize enrollment, reduce operating costs, and be attentive to what's happening on the state level in terms of funding and support for centers. All of these things that you're all doing and that she needs to be doing, but to really be on top of it. She certainly can't sit around and wait. 4.33 months is going to go by very quickly, and she's losing money at a fast clip. But this going through this process is letting her know that. She probably knew that, but this puts numbers to it. This makes her a much stronger advocate for her position because she can actually say, I've got the numbers to show. I've done the math, and this is what it looks like for me. So you can use any number of benchmarks if you wanted to go back and do this exercise for yourself to determine how much money you should keep in your bank account to get through uncertain times. You can look at the delivery, how much the delivery of your service costs, like the direct costs, look at your overhead costs, those are things like rent and administrative. Look at your total cost, which is what Nellie did. Basically, come up with your method and then make a plan on how to get there. You do want to build a reserve for yourself. It says you're either operating or thinking of reopening, and you have a level of uncertainty about what's going to happen with COVID-19 through the next, year and a half at least. The next half a year. So you need to be thinking about what kind of reserve you want to have in place. So think about that, run your numbers, and then make a plan on how to get there. If you've got a board of directors, you can do this in concert with them. Certainly do that. This is an area where they need to be making a decision. So One thing to think about when you're thinking about your benchmark is, and I think I alluded to this in the earlier slide, I've been working with about a dozen child care centers, and for each of those, we calculated what their baseline operating expenses would be if they shut down. And that's sort of, again, the rent, the utilities, the insurance, those things that you know you have to pay no matter what. And then we would calculate what that amount would be for about 3 months, and then we added 1 month of payroll, assuming that there might be some wages that you'd need to pay. It could be the director who needs to do administrative work. It could be the bookkeeper, that type of thing. So that sort of 1 month of full wages helps provide that cushion. Also for the expenses that you might entail if you reopen. This is, you're going to figure out what works for you, but that's one approach that I've been taking, and with early learning centers, and that seems to have been working well. 3 months of baseline operating expenses plus 1 month full wages. It says you'll decide your method and decide what your reserve balance is, and then work your way there. So day of cash in hand, which we looked at as a point in time calculation. We talked about your available cash and your understanding of your operations on a certain date, what your operating expense is. But for a better understanding of cash, you do want to monitor it on a regular basis. And most businesses will do that in consistent time increments, like monthly or weekly, and over a certain period of time, like a year. So you'll see that often a business might do an annual budget, but then they'll also do an annual cash flow projection. And they're going to look at what cash is coming in on a certain month, what cash is going out, and they're going to project that over a year. But monitoring cash inflows and outflows over time will help you develop an understanding of how cash moves through your business, and that's really what you want to get to. And it's in a time of crisis like now, when you have a lot of unanswered questions about your operations and you may be in a tough cash position, looking at it more frequently is probably helpful. Just want you to see what a monthly cash flow looks like. This is obviously cut off at April just because I wanted you to have a clearer picture of it on the screen, but you can imagine this extended out through the end of the year. And this is really just someone projecting cash on a monthly basis. This is the starting cash going in. They had $5,000. This is money coming in. So total cash in for the month is this. These are the expenses. So total cash out is this. And so their net cash is basically net cash in and out is income, the cash in less the cash out. So they put out 511 more than they took in. And so we subtract that 511 from our starting cash, and we have our ending cash in January of 4,550. That carries over to February, and then we start it all over again. And then you do this for every month of the year. There are monthly cash flow resources. If you're more interested in monthly cash flow than weekly, which is what we're going to be using in just a moment, then you can go to this website, the Community Loan Fund. There's a webinar that I did on cash flow management. It was based on using a monthly cash flow template. And there's a practice activity, there's resources, there's an Excel workbook for monthly cash flow, and you can watch the webinar as well. So now we're going to actually look at cash flow forecasting, and we're going to explore this tool. Let me tell you a little bit about the Child Care Center first. It's the Learning is Fun Childcare. It's a small center, can take as many as 34 children. They've had a 50% drop in enrollment since COVID. The director is anticipating a spike before September 1st. Some families have called. She'll be close to 70% of capacity, but also at the limit of what she can enroll following COVID-19 guidelines. And at the time, when September 1st comes, she'll need to increase hours for 2 staff who've been working reduced hours these past several months to support the increased enrollment and the new protocols required for COVID-19. The center did tap into some COVID-19 funding, so she has some money in the bank, but the director knows that she's losing money monthly. She just received her state funding notice and believes that the amount is not enough to cover monthly losses. So she reaches out to the board and lets them know this, and the board asks the director to complete a weekly cash flow forecast and help them make informed decisions over the coming week. So the first thing we'll do is we'll actually look at the cash flow workbook master. And I call this the master because this is, I'll send you all the workbooks we look at today, even the sample one for Learning is Fun Childcare. But I'm going to send you what I call the master. And this is a workbook that you'll be able to use. And the first thing I always tell people is that they should save the file and call it a master. And so you can always go back and you'll have a clean copy. So let's look at this one first. So here you're going to be looking at a workbook. It's got 4 worksheets. The first one has some basic instructions. The first instruction is to save a master copy of the workbook. And the next one explains what the worksheets are. And then the third one is really helping you, telling you that what you're doing when you use a workbook like this, this tool, is you're projecting ahead. You don't know exactly what money is going to be coming in or what money is going to be going out over the 13-week period that you're going to be looking ahead, but you know your business. And so you should be able to estimate well. And that's what a cash flow projection is. You're estimating what cash will come in and what cash will go out. And I do give you some supporting worksheets around tuition and payroll, which will help you make a better forecast, and we'll look at those. The primary work sheet in the workbook is the cash flow forecast. This is the 13-week cash flow forecast. You'll see that there are instructions for each worksheet. We'll look at those more closely when we look at Learning is Fun Childcare's workbook. But just so you can see, the green is really what you want to focus on here. These are the cells that are highlighted in green that you're actually going to be inputting data. Gray highlighted cells contain a formula, so you really don't want to touch those cells. And blue highlighted cells contain a formula, but they also pull data from another tab. So it might, this, for example, this tuition and food program has a formula that allows it to pull data from the tuition and food program worksheet. So you'll see there's green all down throughout because you're going to be putting in information on income. That's not tuition and food program. That's going to come from this sub worksheet. But you're going to be inputting, you know, if there's any fees that might be coming in week 1, that type of thing, you'd be inputting that information for the whole 13, across the 13 weeks. And then the same thing with expenses. You're going to be inputting expenses across the 13 weeks. And that's why those are highlighted in green. And then you're also going to be inputting some non-operating activity information. And I'll walk you through this section when we're looking at Learning is Fun Childcare's workbook. The next worksheet is a tuition and food program. Again, you'll see the green. This is where you're inputting data. You're going to put in your own rates. You're going to put in your group or room names, and you're going to put in your full-time equivalent enrollment for each week. And I'll show you, there's a handy calculator that I created to help you do that. Same thing, whether you have private pay or child care scholarship, if you separate those groups, and if you have different rates for those groups, you can use these 2 different sort of sets of 2 different tables to input that data. If you want to, if you don't separate them, you can just put them all in one. That's fine. And then if you have a food program, I did put in the current rates for 2021 for the food program, and you can do the average meals per day, and that all goes in here. So that's you inputting your data in this worksheet for tuition and food. And then there's the payroll worksheet, and this is where you're going to put in your staff, and you're going to put in the hours they work each week. And this might change over the course of 13 weeks, so you're going to do it for each week, each of those 13 weeks. And rates most likely are the same. However, maybe you had some COVID pay, and so you were paying a higher rate in weeks 1 and weeks 2. Whatever this is, the whole idea of this workbook is to give you the opportunity to shift enrollment and also shift hours and pay over the course of the 13 weeks. So again, this is the green is where you'll be inputting your data. This is unlikely to change. This is the FICA and Medicare tax rate. I put that in, and that formula that will apply to these cells here. They'll build off of that rate. The state unemployment, your rate might be different. Most of you probably don't do federal unemployment, but if for any reason you did, you could input that rate here. The workers' compensation, health insurance, dental insurance, those type of things we'll look at, but you'll also be inputting that data. So this is the master workbook. It's clean. There's no information in here. This is where you're going to input your information. So now we're going to go ahead and we're going to go back to our presentation, and we're going to look at Learning is Fun Childcare's workbook. Okay. Here we go. So now you should be able to see Learning is Fun Childcare's workbook. I already explained what these instructions were about saving the master, and that you're making a projection using your best knowledge about your operations. So this workbook has data about tuition and expenses and other income for Learning is Fun. So let's look at each of these things. Just so you know, the instructions, I mentioned that there were instructions. You see you can't see them right now. I created this little button right here so you can hide those. So we'll open them up so that you can see them. And I just did that so that the financial data is further up for you. You don't have so much of the screen taken up by instructions. But we can open those up for now. As you just touch this little button right here to open and close that. So let's start off. So we talked about the instructions. We've talked about these little cells right here. I input the Learning is Fun Childcare and the date that I did the workbook of July 29th. I would always suggest that you change this date. So today we're in here. It's the 3rd. So say we're making some changes. And so I would update the date. You're always going to put in the first date of the forecast, the first week. So this is August 3rd. We're going to go ahead. We put in August 3rd. If I was starting the forecast for August 10th, I'd put in August 10th, and you'd see the subsequent weeks would update. So you go ahead and you put in the date for the first day of that first week. You're also going to put in your starting cash balance. So that could be 35,000. It could be 10,000. Whatever it is, you're going to put that in here. One little neat thing that you can do is undo. I changed the 28,000 to 35,000. I can also redo it. So if you do something and you're like, oh shoot, I wish I hadn't done that, you can undo that just by using these little buttons up here. Okay. Tuition, we talked about that. That's actually, I'm going to hide the instructions. Tuition, we talked about that. That's being pulled from our tuition and food program worksheet. So we'll come back to that. You're going to be looking at these other income lines because they're green. And so you need to decide, do I have I'm expecting a few new children to enroll in the month of August. They're coming in, parents are coming in next week. So I have an application fee of $25. And so I've got 2 families coming. So that's $50. So you're going to look ahead over the 13 weeks and you're going to think about what you know about your operations, and you're going to input data. So for here, let's see. Learning is Fun Childcare has a parking spot rental. So they lease out a spot in their space. They're in a kind of a busy area, and parking is a commodity. So they have $120 lease payment that they get in the first week of each month. So you'll see that she input that the first week of each month throughout her forecast. Likewise, she's going to get a grant. It's $500. It comes every year in September. So she went ahead and she put in that $500. She's positive that it's coming in. So she went ahead and put it in. If you were going to insert additional lines, I would have you do it above this line. And that way, any new line you insert gets caught in the formula. So if you wanted to put, bank interest, you could put that here. And then if you put, $5, that gets caught in the formula. And you'll see I'm going to use my nifty undo because I don't want to alter the results that I have in this workbook because we'll be using those. So that's it. She's done her income. It's the same thing with expense. I won't go through all of these line items, but I will stop with payroll and related costs. I'll stop here so we can talk about this. So this is being pulled, you'll see right here, from the payroll worksheet. And we'll look at that and you'll see what kind of information we put in. So she's not doing anything there, but she does know that she wants to beef up enrollment even further than what's projected. So she's going to do some advertising. She does have the situation around COVID-19 restrictions, but she wants to be ready. Maybe perhaps build her waiting list for when things shift. So she's doing some advertising in here and she thinks that maybe she'll have to do that again. So she's thrown some money in there, bank charges and credit fees, credit card fees, maybe parents pay with a credit card. So she has a weekly projected expense of about $25. She goes through each of the line items and figures out what she's going to expend. Here's some food costs, she pays monthly. Maybe at the end of August, she's going to beef up her curriculum and cleaning supplies. She knows when she pays her rent, she pays it at the end of the month before the first week of the month. So she put in her rent for each of those weeks. Maintenance, I think what did I say she has? She has a weekly trash service. So she did her $30 a week, but she's also expecting to have the oil burner cleaned that first week in September. So she put that as well. So you'll figure out what your expenses are and you're going to put them in for each of the 13 weeks. And that's how you capture your expenses. Okay, so now we're here at number 20. So basically now she's input all her expenses. We're looking at our total operating cash disbursements for each week. And that's totaled automatically. We had the same thing up here. We had our total cash receipts based off of our tuition and food program income and our parking income, and that's totaled automatically as well. So we look at the cash flow from operating activities. And again, this is an automatic calculation. It's looking at cash receipts, less cash disbursements. And so we know we have a negative net cash from operating activities in week 1 and actually looking through week 4. So we can see we've got something to be concerned about. But we'll see how this plays out throughout the whole 13 weeks. But that's one row that you'll be looking at to see what's just happening from your operations. Cash coming in and cash going out. Am I making money or am I losing money? And so now we're looking at her non-operating activities. And let's see our note we want to go back up to instructions here. So I'm going to do that and I'm going to open up the actually, let me explain what non-operating activities are first, and then we'll go up to the instructions. So basically, because of COVID-19, a lot of you are seeing money funnel into your centers in a way that you haven't before. You've seen the EIDL loan and advance credit, which is the Economic Injury Disaster program under the Small Business Administration, the Paycheck Protection loan program. You've had obviously state funding come in as well. So there's these sources of revenue and eventually expense, particularly if you have a loan, you have to pay those back, that I want you to be able to capture because those are going to impact your cash, but they're not operating activities. So this is where you would input those. You have to be thoughtful about how you input them. And that's what our instruction is about. So let's go back up here. We're going to open up our instruction. And when you're looking at your non-operating cash activities, you can just come back up and look at the instructions and basically look at this. But if an item increases your available cash, so basically if it's adding to your cash, if you had $5,000 and now you have $10,000, you're going to enter it as a positive number. If it reduces the available cash, you're going to enter it as a negative. For example, if you are taking $5,000 from a line of credit, and we're going to talk about line of credits, you're going to enter that drawdown as a positive number because it's increasing your available cash. You have a line of credit, which is basically a kind of lending mechanism with your bank, and you're going to pull $5,000 from that to put it in your bank account, in your checking account, you're increasing your cash. So that goes in as a positive. If you were repaying that, if you were making a $5,000 repayment on a line of credit, it would be a negative because you're taking money from your checking account and using that to pay down the line of credit. So let's go back now. I want to shrink this. Let's go back down to these non-operating activities and see what she had going on. So she has a line of credit and she's making a regular payment on that. They're paying $100 a week, a month to pay down the existing line of credit. So they must have borrowed money against their line of credit. This is a nonprofit, and so she also realized that she had some restricted cash. They got a grant for some equipment or furniture, or whatever it was, and she said, I should take that out of the cash because that's really not available for my operations. They're not going to be doing anything that they planned related to that grant anytime soon. So the cash from cash flow from non-operating activities in week 1 is that negative $5,000. And so that reduces her ending cash balance, right? So we had a starting cash balance of $28,000. We took in $29.86 in receipts. We dispersed $48.18 in expenses. So we know right now that we're reducing our cash, that $28,000, by our net cash of $1,800. So that's about $2,600 or so. And then we're further reducing it by this restricted cash amount, which gets us to about $21,000. So that's telling you where your ending cash is on week 1. And that carries back to the start of week 2. So now we know our available cash for week 2 is $21,169. And once we've put in all of our income and all of our expenses and all of our non-cash operating activities that we think are going to occur over the 13-week period, we should be able to look at that and see what our ending cash balance is for each month. Each week. So you'll see for her, for Learning is Fun Center, they have a negative net cash, I should call this net cash, from operations over the 13-week period. And I'm going to fix that while you're watching. There we go. So she has a negative net cash of $11,187 from operations over that 13-week period. So she is losing money. There's some months where she's making money, but she's losing money overall. She's losing cash. And then her ending cash, because she's got some money coming in, you'll see here she's got her CCRSP money coming in week 2 and week 13, because she's got some money coming in, her ending cash balance, she's down just $4,087. So she's definitely got a situation she needs to be concerned about, and she needs to share this with her board of directors. Before we jump to her cash flow results and then look at our tuition and food program and payroll worksheet, I want you to just look at this quick piece. Remember I told you she had a line of credit. So this is her line of credit starting balance. Basically, and you'll see it's green, you need to input that. A line of credit is a tool that you can set up with your bank, and I would recommend that any early learning center should have a line of credit with their bank. Typically you want to go and apply for a line of credit when you're in a good cash position, because you're basically asking them to extend a loan to you, to give you access to a loan if there's need for it. That's what a line of credit is. And so they have a $10,000 line of credit. Learning is Fun. I think that's what I had said, yes. And they tapped into it recently to pay for an equipment repair. And they're paying it down monthly with that $100 payment, which, as you can see, yes, that $100 payment, which is right here. She's got it spread out in each of the months in an appropriate week. And so that's their starting balance. And so you can see as those payments are getting made, the line of credit is shrinking. Okay, so by the end of the 13 weeks, they've made $300 in payments. Their outstanding balance is $1,700. So think about a line of credit if you don't have one, and what that might do to you, and how that might help you, and be a resource for ready cash. So the cash flow results. So Learning is Fun Childcare Center is losing money on average every week. The net income, or the net cash, at the end of each end of 13 weeks, is the a negative 11, the net cash is negative 11,187. So they've had a cash loss, and their cash loss, overall, their ending cash is down $4,100. So net cash at end of 13 weeks is negative 11,187, and their ending cash is reduced by $4,100. I think that makes that more clear. State funding has helped but not completely covered their losses. Increased enrollment reduces the losses, but not sufficiently. So as she's expecting some increase in enrollment, and we'll look at that. So the center is draining its cash reserve. Remember, it had some beginning cash of $28,000. It's obviously draining their cash reserve because we know that they're down by $4,100 when they get to the end of their 13-week period. So the board of directors needs to review its options with the director and make some decisions. Before we go ahead and see what the board of directors does, let's go ahead and look at our worksheets for tuition and food and for payroll. So remember, taking you back to my blue cells, this tuition, I'm sorry, up here we go. Our tuition and food program is taking the data, pulling data from our tuition and food program, and payroll and related costs is coming from the payroll worksheet. So let's start with tuition and food program. So she went ahead and she put in her rates, her weekly rates, 200, 180, 175. And she also put in her enrollment for the weeks of August. Remember, she's projecting an increase by the start of the next month, September. So she goes ahead and she makes that adjustment to her enrollment. And she doesn't anticipate, although she hopes for changes by the end of the 13 weeks, she doesn't anticipate any changes. So she doesn't want to go ahead and project those. So she goes ahead and she inputs those. You'll notice that this work sheet is set up for 10, to work up with 10 groups or rooms. Ideally, you would just make it work with that, and that's because of the way the formulas operate in this. I haven't come across many centers that have more than that. So it's set up to work with that many. You're going to enter your group names here, you enter your rates here, you enter your equivalent, full-time equivalent enrollment here. This data, these dates are pulled from the cash flow worksheet, so you don't have to do anything there. And again, if you prefer to group enrollees, you can do that, but I've segregated it so you can do different rates if that's applicable to you, although I didn't do different rates here, but if it's applicable for you, you can do it for childcare scholarship children from private pay enrollment. You have that option, although you can group them. So now let's look at the calculator I created for calculating full-time equivalent enrollment. So what I did here is I created this sort of quick and easy little calculator, and everything's been done. You're only inputting cells and inputting data in the green cells. And this is an example, but here's your group or room. You can give it a title if you want. You can say infants, although you'll be changing it as you use it. And then you're just going to put in the number of children. So say you have 2 infants who go 5 days. You have 1 that goes 3 days, 1 that goes 2 days, and 2 that go 1 day. So now you have a full-time equivalent of 3.4 infants. That's what that's showing you. That's all that is. Just like over here, here's our example. We had 2, 1, 2, 1, 1, 3. So we had 24.5 total days for a full-time equivalent of 4.9. That's because you take the total days and you divide it by 5 days in a week. So for any group of children, you want to figure out your full-time equivalent enrollment. You just, again, put in the number of days that they are enrolled, the number of children that are enrolled for those number of days, and then you'll get your full-time equivalent enrollment, and then you can just go on up here and input that number in the appropriate week. So hopefully that quick and easy little tool will help you figure out your FTE. If you don't have your own way of doing it already, if you do, fantastic. Go ahead and continue to use that way. So I'm just going to go ahead and clear this out. It shouldn't matter because that doesn't carry over. You have to input it yourself. Okay. So the other piece of this worksheet is the food reimbursement. So you're going to enter the average number of meals served daily for each meal type. And again, these rates are the current rates. You go ahead and you do that. Again, she increased the average meals a day because she knew that her enrollment was going to be increasing come September. So you would do the same thing. You'd look at each week. What is my enrollment going to look like? Which will tell you what your meals are going to look like. And all of this data that you input feeds into these rows down here. So the private pay tuition is calculated, childcare scholarship tuition is calculated, and the food program is calculated for each week. And that's the data that carries over to the cash flow. So those 3 rows are summed, and I'm just going to show you so you'll see that it's working. 286646, and you'll see 2866 if we do this. Oh, wrong cell. If we do this, you'll see 46. So that's carries over. It's to this cash flow work sheet. So now we look at payroll. That's the tuition. Now we look at payroll so we can see what's carrying over there. And so for payroll, she input her staff and she input the hours that they work and their rate for each one. The weekly pay is calculated automatically. You can see that right here in the gray. And she did that for weeks, let's see, she didn't make any change until week 6. That's when she knew that she was going to have to increase her hours. So that's all you're going to do is you're going to put your staff names, you're going to put in their average hours they work each week, or you think that they're going to work for the week, that week 1, week 2, you're going to put the hours you think they're going to work, you're going to put in their rate. I don't believe she changed the rates at all. Maybe she wasn't paying any COVID pay, or she's not expecting any changes. Perhaps during your 13-week cash flow, you know that your annual raises are going to kick in. For whatever reason, you have the opportunity here to adjust rates. They could be the same throughout the 13-week period. But most likely, because of the situation we're in with fluctuating enrollment, you may be projecting changes in your staffing, and I wanted you to be able to do that. So you are actually going to go ahead and input the hours for each staff person for each week, and you'll input their rate. And then that's, again, calculated, and that is all you need to do for the wages. Then you come down, and like we said, these rates are set. For FICA and Medicare, that's Social Security and Medicare. Unlikely yours would be the same. You'll know your state unemployment. If you choose to go ahead and put that in there, then go ahead and do that, and it'll calculate what the weekly cost is for that for all the employees. And then federal unemployment, that shouldn't be relevant for any of you, but if for any reason it was, that's where you would put it. So the other thing that you're going to put in here is things like workers' comp, health insurance, and that type of thing. Now, she didn't have any benefits like health insurance or dental, but obviously she's paying workers' comp, and she knows that her annual bill is paid in October. So she goes in October and she puts the whole bill because that's how she pays it. And she's putting it in for the week that she's paying it. She's not going to spread it across the 13 weeks because this is a cash flow. We want to input our expenses when we think they're going to happen. And she's going to pay her workers' comp the week of October 5th. So that's when she puts in that full amount. So that's a real hit on her cash, but she needs to know that and she needs to input that. So if you have a monthly bill, you put it in the week that you believe you're going to pay it. Same thing with health insurance. If you do offer health insurance to your employees and you pay it the first week of the month each month, then you're going to be putting in, say it's probably more than that, say it's $5,000. Then you would go ahead and put the first week of each month, you would put in that $5,000, whatever that is. You think about when the bill is paid. Other benefits, what was her other benefits? Oh, she contributes to an HSA. She does $100 per full-time employee once a month, a health savings account. And so she increased it, right, for the first week in September that month because she knows that one of her employees is going back to full-time. And then that carries forward to the next month of October. So that first month it's 500. and then it increases because she increased her staff. So this right here, this federal tax credit piece, I'm not going to spend much time talking about this, but I would just suggest to you, and this resource is made available in the Google Drive where you found this video, to be aware of the CARES Act and federal tax credits that you are eligible for because of the CARES Act. Basically, if you have to pay sick leave to employees, or they have to be out on family leave because of the coronavirus, you can receive a tax credit for those against those wages that you paid. So go ahead and read this resource. It explains what it's about and how you apply for the credit. Again, it's available in the shared drive where you found this video. And it's a fact sheet from the IRS, and it talks about the available credits under the CARES Act. And this is where you would record those credits if you went ahead and you applied for them and received them. Again, like the other additional primary cash flow worksheet, other instructions for this worksheet are here. You just need to click this little button to show them or hide them. And I want to make sure I didn't miss anything. You enter the names, average hours a week for each employee. We talked about that. Enter workers' comp. Okay, nope, I think we covered everything. So this is the payroll worksheet. This is the tuition and food program worksheet, and this is the cash flow worksheet. Okay, so now we're back to the cash flow worksheet. We can look again at the results for Learning is Fun Childcare based on the tuition she put in, the enrollment she put in, and the staffing, again, assuming that she was going to see an increase in September. So as we just reviewed before we looked at the tuition and food program and payroll worksheet, they're losing money on average every week. They have net cash at the end of 13 weeks of just over 11, and their ending cash is reduced by $4,100 overall. State funding has not helped completely. It's helped, but it hasn't completely covered their losses. And the increased enrollment, which she sees for September, reduces losses, but not sufficiently. So she's basically draining cash, and the board of directors needs to decide what to do. So now we're going to look at the board of directors. They meet, they review the cash flow, and they make some decisions. So we're going to jump to another workbook. Let me make sure you can see that screen. Here we go. Okay, so now we're looking at the cash flow from the board. This is what, after the board meets and makes the decisions about what to change for the Early Learning Center. They're going to do some things with enrollment, and they're going to make some decisions about some non-operating cash sources. So here's the primary cash flow workbook. Let's scroll down and see what they do. All right. So under one of the non-operating cash activities, you'll see that there's an EIDL loan and an advance credit. So the board had received the advance. They applied for the economic injury disaster loan, and they got the advance, a $7,000 advance that they received because the number of employees they had. And because they applied, they also were offered a loan. Originally, they were not going to accept the loan because they didn't like the idea of taking on debt. But after looking at their cash flow, for the next 13 weeks and recognizing that they might be operating at 70% enrollment for some time, they decided that they should go ahead and look at getting the EIDL and taking the actual loan, which was just over $8,000. That's what they were offered. And it's not, while traditionally you may not want to take on debt, this is pretty much low cost debt. It's low, it's long term. The terms for the EIDL loan are pretty generous. It's 30 years and it's low interest. And they may not end up needing it, and it allows for early repayment. So there's lots of good reasons for them to go ahead and add this as a resource to their cash so that they have a little bit more of a buffer. considering the uncertainty around their operations in the coming weeks and potentially months. They do go ahead and decide to add the idle. And they go ahead and they do that, and that increases their cash by $8,200. So that net cash position that they were in just a little while ago of $11,187, and the ending cash reduction of $4,000 is shifted. It goes up. Their net cash position is now just about $3,000, and now their ending cash has been boosted. They're at $4,113. So they actually have a surplus. They've actually grown in their cash position at the end of 13 weeks rather than had a loss. They decide to keep infant enrollment at 4. If you look back at the Learning is Fun tuition workbook, she was increasing infants from 2.2 to 4. There's 3 there, and then she had 1 here. So she originally was going to have that at 4 infants. They decide to go ahead and keep that at 4 so they won't have to boost staff so much. They actually can reduce staffing by 1 full-time equivalent in the float if they go ahead and they don't take on the infant enrollment. So they're going to actually backtrack on that, and that reduces their that obviously has a negative impact because they're losing $1,800 in income. So their net cash now is back a little higher in the negative. And they've reduced a little bit their cash gain by that amount. So here we go. We're at $47.87 and $23.13. But by reducing the staff, they've decreased their expenses, and so they're adding to their cash net cash $5,128. So this finally gets them into the positive side on net cash from operations. That's income coming in and money going out. They now will net over 13 weeks $341, and they'll be able to boost their ending cash by that amount, so they're at $7,400. They also are going to focus recruitment on filling toddler spaces. There is some room for that, and the director thinks that she'll be able to push that with some targeted inquiries. So they're feeling pretty confident about that. So they are going to go ahead and add that projected cash, and that again, that boosts things as well. So their net cash from operations after 13 weeks could look like $22.85, and their ending cash would be at $9,385. And lastly, they decided if they needed to, they would tap into the line of credit. And if they do that, they know that they can end their net cash. The net cash from operations at that point would be at $10,285, and their ending cash position after 13 weeks would be at $17,385. So they don't hope to do this. They don't really want to do that, but if they need to, they can. That is an option that they have available to them because they have a line of credit. But if they're able to get to here at the end of 13 weeks, there's no reason for them to do that. But it's good for them to recognize that as a resource, because at the end of 13 weeks, if all of this, if they accept the idle, they reduce enrollment, they reduce staffing, and they're able to boost toddler enrollment, they're going to end in cash position. They'll be in the positive. They'll have grown cash by $9,385. So they'll be in a better position to withstand the next 13 weeks, which they will have by that point in time have already forecasted. So let's talk about that, because that sort of leads us into next steps. So you want to continue to monitor cash flow weekly or monthly, if that's the approach that you decide you want to take. And what that means is you've forecasted these 13 weeks. You've seen what the results are. You have a discussion with your board. If you're not board with your proprietary center, you look at it yourself. You make some decisions about what changes you might want to make. You reforecast, and then you see how things play out over the 13 weeks. At the end of each week, you want to input the actual inflows and outflows of cash. And so by that, I mean, week 1 passes. Actually, I'm going to change this. Oh, so week 1 passes. That's exactly what I did. Yeah, week 1 passes, and you're going to go in and you're going to actually say that instead of $2,866, you earned $3,500 in tuition. Maybe something happened, you had a boost, and you did get $50 in fees. So you're going to go ahead and you're going to actually put what actually happened. You can do the same thing with salaries, put 4,200. You didn't end up spending that much money. You got a deal, you spent 75. So you do that for all of your income and expenses. You put what actually happened. And that will give you a more accurate reflection of what's going to happen with cash in the weeks to come, because as time is passing, you're actually learning, you're actually gathering information on what your actual inflows and outflows were. And so that's going to influence the bottom line at the end of week 13. So you'll go ahead and you'll make those updates on a weekly basis. It also allows you to set aside the time and opportunity to look at your cash, right? If you know at the end of each week, you're going to want to go ahead and you're going to want to update your cash flow forecast. You're setting aside the time intentionally to then go ahead and look at it. The worst thing to do is to go ahead, not the worst, but one of the worst things you could do is go ahead and create this tool, this 13-week cash flow forecast, and then not use it. So if you promise yourself that you're going to create your 13-week cash flow forecast, and at the end of the week or the start of the next week, you're going to go ahead and you're going to actually input what happened with cash, what came in and what went out, and keep your 13-week cash flow forecast current and as accurate as you possibly can, it'll be more useful for you, but you'll also be providing yourself an opportunity to be very in tune with your cash, which is what you want to be at a time. You always want to be that in tune with your cash flow for your business, but you really want to be in tune with that during a time when there's so much uncertainty. So you go ahead at the end of each week and you input your actual inflows and outflows. Don't make changes to the sub worksheets. You're actually just entering the data in the week that it's relevant. You can override the formula that's pulling information from from the tuition and payrolls. You can override that. And then you're going to respond to the changes in the cash flow as needed. If you see that things have shifted for the better, maybe that allows you to make a purchase that you hadn't planned on making, or make a change in staffing, whatever that is. If things look like they're not going as well as you thought they were, likewise, you might suspend a purchase, or you might make adjustments in staffing to accommodate the reduction in what you thought in cash. You'll update this cycle every 13 weeks. 13 weeks so that you can start over. You basically can change the date in this workbook, or this is why it says 11/2 now, because our last 13-week cycle ended at near the end of October. You can change the date and start over, or you can go ahead and open up the master workbook and use that one. You might want to go ahead and do that, particularly if you're overriding the formulas here, because the formulas won't continue. So go ahead and you start over, you input your, you go ahead and you can start over with the master workbook and update your tuition, your projections for enrollment for the 13 weeks and the hours for staffing. What you could do, if you don't want to have to redo everything, is when you go ahead and you create your master workbook, you set aside a clean master with nothing in it, and then you go ahead and you put in your group, your room names, infant, toddler, preschool, your rates, and you go ahead and you do your staff names, and the wages, assuming that those aren't going to change much. And then you can do a save as master with the base data. And so that when you start your next 13-week cycle, you don't have to re-enter employee names, and you don't have to re-enter group or room names and stuff like that. Anything that you know would be consistent on a regular basis. Same thing with your cash disbursements and the like. If you change these to more match your expenses, perhaps you don't have transportation costs, but you do have maintenance costs that you want to capture. If you make that kind of change, you can go ahead and make those changes, and then have your own master template that's more aligned with your program. So let's go back down to next steps. Make sure we caught everything. And yes, when you do start over, make sure you rename your file because you're starting a new 13-week cash flow. You don't want to lose the last one. So you can rename 13-week cash flow for August 3rd. And you can save that 13-week cash flow for August 3rd. You make sure you keep that one. And then, but if you're using that as your template for your next 13 weeks, you go ahead and you do a save as and rename it 13-week cash flow November 2nd, 20. And I can just show you how you might do that. Yeah. You just do save as and you just change the date 11 to 20. That would be one way to do it. I'm actually going to save this someplace else so we don't override this. And there you go. So those are the next steps if you want to go ahead and continue and you create another workbook for yourself so you can look at the next 13 weeks. All right, so now we're back at our presentation. And I want you to think about how you can use that tool, why it's important, and how you can use that tool to manage cash flow now. More importantly, it gives you an opportunity to not sit on a cash flow problem, which is a lot of time what we do. You know, we don't know something concretely. We don't know that it's something that's going to happen for certain. You feel like you've got a cash flow problem, but you haven't really identified it because you haven't run the numbers. And so it's easy to sort of just put it aside. Doing an activity like this, an exercise like this, taking the opportunity to really analyze your cash flow makes it harder for you to actually sit on the cash flow problem. It allows you to identify it and then act. You can work with your board of directors as applicable. You can negotiate short-term relief from lenders, negotiate payment schedule with vendors and suppliers. There's lots of ways that you can go ahead and try and tackle it before it becomes worse. You know, certainly using tools like this will help because it helps you identify the need. You know, recognize that vendors are also having problems. They're going through COVID-19 as well, your vendors and suppliers. So they're going to be wanting to get paid. So they're probably going to be much more open to working with you. And so it's a good opportunity to go ahead and to reach out and, you know, create that relationship with them that allows you to hopefully renegotiate terms and help you extend your cash. So don't just sit there and do nothing. It's much better to go ahead and think about how you might work with your partners, really, your vendors, suppliers, and your lenders to help you get into a better cash position. You can obviously make operating adjustments, you know, aligning your staff with current enrollment, exploring cost savings and operating efficiencies, you know, perhaps adjusting program offerings. You know, some centers were only doing full-time, maybe they're doing part-time now. I know a lot of centers have shifted their schedule to shrink the program day, which might make it more challenging for parents, but it allows you to take on the extra costs of cleaning and to deal with the extra screening time and the sort of restrictions that are in place now for your program. Increasing rates is never a great thing to do in terms of relationships with parents, but you look at your rates. If you haven't increased them in a while, now might be the time to do it. It's really important that you cover your costs as much as you possibly can with your rates, because that's your primary mechanism for earning money. Tap into COVID-19 funding sources if you haven't already. Those sources are still out there. The Economic Injury Disaster Loan is still available, and the PPP, I actually think they're going to be doing a second round of that, and the initial round is still open as well. And of course, conserve your cash. Don't use up all your cash. Establish that baseline amount that you want to keep on hand. Remember, if you're shut down, you want to have a certain amount on hand so that you can reopen and then you can weather a closure. So make sure you keep that in mind. And you figure out what that baseline is and don't let yourself get below that number. Key takeaways: now more than ever, you need to watch cash in your business. You should always do that, but you certainly want to be doing that now. You need to understand your current and projected cash position to make effective financial management decisions. It's really hard to know what to do if you don't know where you stand with cash, and you don't know where you will stand, whether it's a month from now, 2 months from now, or a year from now. You really should forecast what cash looks like so that you can make informed financial management decisions. Use the cash flow forecasting tools. They can help you do that. And now is a time to conserve cash, as there is a likelihood that your business may need to close for a period of time due to a resurgence or COVID-19 incident. We just don't know. Tap into expertise in COVID-19 funding sources. As I said, they're still out there. If you're a nonprofit and you have a board of directors, certainly, talk to them. Maybe you have legal expertise or banking expertise, business expertise on your board. You should certainly, that's a resource for you. You should be tapping into it. There are experts out there. You can go to the Small Business Administration for nonprofits. There's the New Hampshire Center for Nonprofits. There are resources out there for child care centers, and I list a bunch of them at the end of the webinar. You can reach out to these organizations. Some of them are offering free advice. Even if you have to spend money, now is the time to spend money. In the short term, it might really help you in the long term. So think about getting advice if you're unclear about how to tap into funding sources or how to make decisions around funding sources. Remember that funding right now is likely forgivable or favorable. This type of financial resource is unusual. You don't see these kinds of loans like the EIDL and the PPP advanced to businesses on any other time. It's a very unusual circumstance, and so the ability to tap into these is unique, and you should take advantage of it. Consider the PPP loan and take advantage of CARES Act tax credits, and that's that resource that I mentioned earlier. You can find that in the Google Shared Drive. Don't be silent. The industry will change because of this. It is important that all stakeholders know what your business is going through. They should hear your stories. You want your families to know. You want funders to know, licensing agencies to know. The industry will change. And so it's important that child care center directors are part of that conversation, and that you're sharing your stories and that your voice is heard. These are the resources available with this webinar: the 13-week cash flow master Excel file, the monthly cash flow template and practice activity, which is on the Community Loan Fund website. And again, that's that resource. If you'd rather do monthly cash flow forecasting than weekly, you can go to this link and you can get those resources there. I'm going to share with you the Learning is Fun Childcare, that Excel file, so that you can walk through what I did with that center on your own and spend more time with it. The PDF of the PowerPoint presentation that you saw today, that fact sheet on the refundable tax credits, and the recording of the webinar. You'll be able to get that as well. These are the cash flow resources that I mentioned. I would be listing New Hampshire Community Loan Fund's Business of Childcare resources. That's that, again, that webinar with that monthly workbook, cash flow forecasting tool. First Children's Finance, it's an excellent website. It's similar to the Loan Fund, but they're out in Minnesota, and they provide the same types of services to the community, the child care community, that the Loan Fund does, and they have an excellent library of finance tools for early learning centers. You can find them there. Obviously, the New Hampshire Center for Nonprofits, if you are a member, they have their new Nonprofit Next resource, and that's a library of resources for nonprofits around board, planning, finance, human resources, and the like, and that's another excellent resource. I am providing you a resource, a learning resource for Excel. If it's something you're not particularly comfortable with, this website, you can find free tutorials to help improve your Excel skills. I always think that's something that folks who run businesses should try and do. Excel is an exceptional tool for learning to manage your money. And the thing I like about these little lessons they have on this website is they break it down into modules. So if you really just wanted to learn how formulas work, you could just spend time learning about formulas or formatting or the like. So it's an excellent resource, and so check that out. This is, I won't go through all of them, but the rest are financial and expertise resources on the COVID-19 stuff that's out there, the PPP, the EIDL, Small Business Development Center for New Hampshire mentioned some other COVID-19 assistance. These are other financial and expertise resources. The Community Loan Fund has a loan program for early learning centers. SELA, State Early Learning Alliances, has resources for early learning centers and talks about shared resources in particular. You can check that out. The state of New Hampshire has its own web page for COVID-19 resources, and then the Community Development Finance Authority in New Hampshire does as well. Whole bunch of them. Just look at that. Obviously, most of you, I'm sure, are aware of the Child Care Aware and their resource page. So there's lots of resources for you to tap into if you don't know about them already. Thank you for your time today. If you attended the webinar that was held on August 10th, then you received your certificate. Hopefully you find this webinar and the resources attached to it useful to you. My contact information is on the front slide. If you have any questions, feel free to email me, and I'd be happy to get back to you and respond.